What's up? What's up? What's up, my mind your money business folks? It's me yet again with another video on today's stock market. Hope you guys are doing well. It's Friday, beginning of the weekend. And so today, the S&P 500 slides as rally pauses, but stocks notch back-to-back weekly gains. So as I pour my water here, so let's get into what happened today in the market. Hopefully you guys are in the market and not trying to time the market, because that is impossible to do. So the S&P 500 closed lower after hitting new records on Friday as investors took some profit to end a solid week centered on President Donald Trump's return to the White House. So they're saying investors took profits. Nothing wrong with these companies, some of the companies, right? A lot of companies, say like Nvidia. There's nothing wrong with it. Broadcom, Tesla, Apple. But investors took profit. There were a lot of gains these last couple of days. And people with large amounts of money invested into these companies made millions and millions of dollars, so they took profits. Can't blame them. I would do it too if I was them. Because when they do that, it drops the price lower, and then people who are not in control of their investment, they withdraw their money out, and then the stock goes even lower, and then they buy back in with half the profits that they took at an even lower price. Then the price goes up. I think you get the point. But either way, the benchmark index shed 0.3% to 6101.24 points, reversing course after hitting a fresh intraday record earlier in the session. The Nasdaq Composite slipped 0.5% to 19,954.30 points. The Dow Jones Industrial Average dropped 140 points, or 0.3%, to 44,424.25 points. Friday's losses snapped a 4-day winning streak for the three major indexes. Some mega cap tech stocks that helped drive the market to all-time highs pulled back in the session, putting downward pressure on equities. Nvidia slid more than 3%, while Tesla fell more than 1%. I need to bring that up. Excuse me for a second. I have to find something right quick. Bam. Okay, despite Friday's retreat, excitement towards Trump pro-business policies has largely pushed risk assets higher this week as investors focus on his inauguration. Traders were also relieved that there have only been threats on the tariff front from Trump instead of formal action during his first few days in the White House. So that's a good thing. All three major averages posted their second straight positive week, signaling that the bull market is back in full force. Bull market after December pullback. Bull market, like a bull with his horn that strikes up. So that means when they say bull market, they're saying the market is going up. Whenever you hear me read or talk about a bear market, like a bear with its claws, it strikes down. So bear market means things are going down. So the S&P 500 and Nasdaq each rose around 1.7% this week, while the Dow climbed 2.2%. In addition to hitting fresh intraday records this week, the S&P 500 also notched a new all-time closing high on Thursday. That is true. Notably, Trump said on Thursday that he would demand the interest rates drop immediately when addressing world leaders in Davos, Switzerland. The president also said he would ask Saudi Arabia and other OPEC nations to lower the price of oil. So far, markets have reacted to every statement made by the president, even those that should not have any impact, said Mark Malik, chief investment officer at Cyber. This shows that traders have not yet settled in their pace. Beyond politics, Market participants kept an eye on corporate news and earnings report. Novo Nordisk rallied more than 8% following positive early stage results for a weight loss drug. Texas Instruments, on the other hand, slid more than 7% on weak earnings guidance. This action comes ahead of a busy week next week when attention will turn to big technology earnings and the Federal Reserve meeting. Remember, they're meeting towards the end of the month next week to talk about interest rates. But the market supposedly is not expecting a cut, right? So Fed fund futures are pricing in a more than 99% chance that the central bank leaves interest rates unchanged, according to CME Group's Fed Watch tool. Yeah, and that's it. So let's see what happened. So the S&P dropped. We already talked about that. But yeah, Nvidia dropped over 3%, closing out at $142.62. Tesla down 1.41%, closing out at $406.58. Apple down 0.39%, closing out $222.78. Palantir, no gains, no losses, closing out at $78.98. Broadcom is in the green, up 1.84%, closing out at $244.70. My SPLG S&P 500 ETF was down 0.31%, closing out at $71.51. What else do we have? Oh, where's my FTEC? Almost forgot that. FTEC, my information technology ETF, down 0.96%, closing out at $190.45. I remember when I bought this stock. I bought this ETF last year. And I think when I bought it, it was $145, $150. And look at how much it has gained. It is up to $190 now. And the reason why I bought FTEC, which is an information technology ETF, which tracks like the top producing information technology companies, about 296, right? It's the same as, I believe, what is Vanguard's information technology ETF? Because let's just do this. When I bought SPLG, it was around $45, $50 as well, and now it's up to $71, which is good. SPLG, which tracks the S&P 500, is right now at $70, right? $71.51. It's the same as Vanguard's S&P 500 ETF. VOO is the ticker symbol. And that stock is being sold for $559.01. To me, SPLG was the better choice. I think, Vanguard's Information Technology ETF is VGT. I just remembered. So again, Vanguard Information Technology ETF, VGT, the same as my FTEC. They have the exact same companies within the fund. VGT is called Vanguard Information Technology Index Fund ETF shares. Ticker symbol VGT. Same as mine, is down 0.96%. But that fund is sold for $640.13. My FTEC is sold for $190. It's just the name. Vanguard is a more popular name, so more people have money there. So, but I'm like, I can buy more information technology FTEC shares than I can Vanguard at $600. I can buy more $190 currently, right? But yeah, that's all I'm gonna go over. I think that's enough. I've talked enough. All right, so you guys, hope again, lower your debt to income ratio, invest. Do not wait. There's no right time to invest. There's no right time to take the risk because it is a risk. Only invest money you can afford to lose. That's why you budget. That's why you have your emergency fund set aside for emergencies, because emergencies, it's not when they're going to happen. They're going to happen. Get out of debt. Lower your debt to income ratio. Stop working so hard for this paper that we call money, but you have no control over it. Stop working and not making enough money. Figure out a way to, make yourselves more marketable to the market. Get some training. Put your money there. Live below your means. Budget so you can tell your money each month where to go instead of trying to figure out where it went. All right, so again, like, comment, subscribe, share this video. Let me know what you guys think, if you think anything at all. Disclaimer, I'm not a financial advisor, nor am I trying to pretend to be one. So any and all information on my channel is for informational purposes only, and it reflects my opinions. So please consult with a financial advisor before you invest any of your money. All right, so you guys have a blessed day, great weekend. Do something positive, save your money. Love you. Peace.